Creating success out of failure. Creating success out of failure.
I'm Jonathan Federa. I'm here to inspire you to hustle and grow your income while doing what you love. Just because you have problems doesn't mean you can't prosper. Just because you have tragedy doesn't mean you can't triumph. Actually, you should be taking advantage of that.
There's positivity in my pain. I took scarcity and turned it into strength. I always tell life, there's not much you can do to me where I won't make an obstacle an opportunity. We never lose, we only learn lessons. If you wanna change your perspective. If you don't know how to do that, we'll show you how right now. Cause it's about to go down. You are tuning in to creating success out of failure. Creating success creating success out of failure. Out of failure.
Hey everybody, and welcome to Creating Success Out of Failure. I am here with my friend Stephen Wible. He is a very, very seasoned real estate investor, and he happens to know a thing or two about business credit. So I figured this is the perfect guest to have on. And in my dealings with Stephen, it was kind of funny. We found out that we live probably 3 miles away from each other.
That's it.
Yeah. So Stephen, tell us a little bit about you and your background and what you're doing in real estate, and then we'll get into the business credit side of things.
You got it. All right. So my name's Steve Wible, actually.
Wible. So I'm so sorry.
It happens. No big deal. I'm originally out of New Jersey. I'm down here, obviously, in Tampa, in the Tampa area. And I grew up in the manufacturing world. I learned the printing industry from the time I was literally 10 years old. My father was in it. His father was in it. So in that world, credit is of utmost importance because you're always giving terms to your customers. So you need to get terms from your suppliers, right?
Absolutely.
You've got to have the cash flow to manage the business, especially growing. It's funny. People worry about going out of business when the business is slow. I think it's more concerning when the business is growing because you've got to finance that business, right? You got to somehow finance that growth. So I learned a little bit about business credit then. I built a fairly decent sized company, big enough to be able to sell. My partner and I sold, and I was sitting in my brother's kitchen saying, I don't know what to do. I'm in my late 20s, early 30s. Now what do I do, right?
Yeah.
And he said, well, I bought a couple of houses and rented them out. You know, maybe you ought to consider doing that. I said, well, let me see. And he broke it all down for me. And I said, okay. I said, but let's go ahead and turn this into an assembly line. And we ended up doing 300 of them.
Oh, wow.
And we did it in a year.
Multi-family, single family?
All single family. I had it down pat. I knew exactly what it would cost me to rehab a house. If I just walked in 13 seconds, I knew exactly what it cost. Because every house I bought was roughly the same size. They were row homes in the Northeast. Same size kitchens roughly. It was just easy.
Yeah.
So anyhow, did really well with that. Used business credit, leveraged business credit to be able to grow it so quickly. Didn't want to mess with my personal credit. And took, like I said, over to 300. And in addition, also one of the top Remax agents, actually just became one of the top real estate agents. And then ironically found you and started talking about business credit. And now I find myself talking about business credit more than anything else.
Yeah.
So anyway, that's kind of how I got where I got.
Nice. Let me ask you a question. How do you buy the properties with business credit?
Well, you don't, because that's a big misnomer. So I think the better question is let's define business credit first, and then understand how it relates to literally any business. So business credit is credit that your company can get without being tied to you personally. So again, credit that goes to the company, not to you personally. And that's going to come in all types of forms. Some of them are net 30 accounts. And for those of you who don't know what net 30 means, that just means that you buy something from them, like going on Amazon, buying something from Amazon, they ship it to you, then they send you an invoice, you have 30 days to pay it. That's called net 30. And there's net 7, net 14, net 30, net 60, net 90. That's what's out there. So you can get that credit pretty easily. That's right out of the gate. And then from there, you're going to get high limit store credit like Amazon or, Home Depot, Lowe's. Keep in mind, I'm saying Home Depot and Lowe's for a reason. You can get pretty much credit at any major store. At one time, JCPenney's was great for business credit. If you needed anything for your office, unfortunately, they're going away. They're going away the dodo bird. But it doesn't matter. They get replaced. Walmart doesn't matter. Matter of fact, speaking of Walmart, did you know, Jonathan, that Walmart's entire business plan is based on business credit? Their entire everything they sell, they haven't paid for yet. right? Amazon did a better job. They don't even buy it. They just let the supplier supply it, and they just do a little markup in between. But in Walmart's business plan, they actually get the suppliers to give them the product and give them long terms, 60, 90, 120-day terms. And then they put it on the shelf, they sell it retail, and then they pay for it when the terms come due. So smaller companies are actually financing a bigger company.
Yeah.
I like to reverse that, right?
Yeah.
So when I was flipping properties, when I was rehabbing my properties, I liked Home Depot to finance my rehab. I wanted them to give me terms so I could buy the supplies, and then I would use one of my corporate credit cards to pay my contractor. So I never really put any money out of my pocket.
Nice.
Right? I used hard money. I used private money to buy the properties, and they would usually escrow the construction to make sure that you did it. So you had to front that money. I didn't want to do that. So once they saw the property was rehab, they would release that escrow. Let's say it was 30 grand, right? Yeah. I would take that 30 grand, instead of paying off Home Depot and the American Express or whatever card I used, I put it 10,000 down on 3 more properties. Yeah. But I'd put that house up for sale immediately and usually sell within a week. Nice. So I'd end up paying it off within terms. But now I've already got 3 more under construction. Yeah. And that's how I scaled it. Right? What people don't realize is you're going to get, like I said, what is business credit? You can get it with stores, you can get gas cards, you can get vehicles. This always shocks people. You know, you could buy a car without a personal guarantee. Yeah. People are like, no, absolutely, 100%. You don't think that the guys on Wall Street are personally signing for those cars, do you? The company signs for it, right? So there's no reason why even a small business can't do exactly the same thing. It's available, but it's in their best interest, they're being the providers, to get your social. So they don't even teach their employees, because they want them to demand your social. And we, as Americans especially, are so used to giving it that we're like, okay, here it is. Yeah. And the minute you do that, guess what? You're on the hook. Yeah. Right? So anyhow, that's kind of what business credit is. How I was able to use it, like I said, to scale with real estate, was to let larger companies finance my construction and whatnot. But in addition to that, I didn't put anything in my name unless it made me money. So I didn't put debt on me personally unless I was going to make money off of that. Like I bought an apartment building for 300 grand, sold it for 1.1 million. That was an opportunity for me to make money. I didn't mind signing on the dotted line for that. Yeah. Right. You're never going to buy either single families or commercial properties without a personal guarantee. It's just not going to happen till you become what we call an institutional investor, 50 million or more. Yeah. Or institutional borrower, excuse me. So that's okay. Because the way to keep your credit score high is to not use it for all the mundane junk. Yeah. Don't use your personal credit card. Like I love when I go to a gas station and I see people I know that own businesses whip out their personal credit card to buy fuel. I'm like, what are you, nuts? Yeah, that's crazy. Why are you using a business credit card? Because you know what happens when your utilization goes up, Jonathan? When your credit goes down. Right. So people don't realize they're doing just like, yeah, but I'm going to pay it off. Well, things happen, right? Sometimes maybe you can't pay it off. Now your score just went from 750 down to 660. Yeah. Just using an example. And that's exactly when the best opportunity in the world is going to show up and you can't take advantage of it. Right? Absolutely. Like I know my score is always in the 700s, always. I know I have lots of equity in my house. I know if an opportunity came on the table where I thought I could double my money, I'd have access to cash. Of course. I'd get it. Because I don't use my personal credit for day-to-day operations. So that's really how I did it.
So when you're applying, right, for business credit, you put your tax ID, correct?
Actually, you don't put anything.
Okay.
You leave a social security number blank. You have to leave that blank. Do not fill in anything in that SSN blank. It's illegal. It's actually against federal law. So don't try and put your EIN number in there. Just leave it blank. What'll happen is if you fill out the application and they put company name, you put your company name, they can pull your business credit based on your name and your address. Got it. They don't need your EIN number. Okay. Right? So they're going to either pull Dun & Bradstreet or Experian or both. Mm-hmm. And they're going to look and see what your credit looks like with those and then make the decision accordingly. See, one of the problems with business credit, it's not like personal credit. It doesn't just happen naturally. You have to actually think about it and do it. It's a proactive situation. Here's why. You know this. 7% of companies report, the rest of them don't. Yeah. Now, 97% of companies actually pull business credit to look at it, but only 7% of them actually report. And that's because it's not cheap, it's expensive. Yeah. So you have to know who to go to.
How do you make them report? Can you make somebody report? Like, that's a big thing I'm always asked.
Yeah, you can't make people report. Okay. There's no way. Dun and Bradstreet has a program where you can pay them thousands upon thousands of dollars, and you can give them your supplier's info, and they'll manually place it on your D&B report, against your DUNS number. But here's the problem, and I'm going to use the consumer side to make my point. If you buy a trade line from one of those trade line supply companies,
it's the biggest scam I see.
Exactly. So it's there for 3 months, then it's gone, right? It's dumb. I know why people do it. They're trying to get a mortgage, maybe get a better rate. I actually get why people do it, but they can see it.
But it doesn't even make sense. One, they can see it, and two, people are buying trade lines that don't even fit their industry.
Right. Or better yet, fit their profile. Here you are with three $500 credit limit cards, and suddenly a $25,000 one shows up. Yeah. That's so stupid. Anyhow, so with Dun & Bradstreet, they'll place real legitimate trade lines because they are the people you're doing business with. But here's the issue. At the end of the year, if you don't renew that contract and pay them again,
it's off.
They're all dead.
Yeah, it's crazy.
They're just no good. So you've got to do it organically. And the only way to do that is to know who reports and are you going to get approved before you apply, right? And that's a fishing game. That's a hunting game. You've got to know. If you don't know, you're constantly testing. Here's how you know you get denied for business credit. You put the application in, they come back and say, we need your social. They don't say no. They just say, we need your social, which means you've been denied.
Yeah.
Okay. So the key to building business credit is you've got to know who to go to. And then you've got to know who they report to, because if you build your Dun & Bradstreet file and it's a real strong file, that's great for vendors. But when you go to get a vehicle, they're going to look at your Experian. Now what? There's nothing there.
Yeah.
And as you know, when nothing's reporting on your business credit report, they actually give you a failing grade.
Yeah.
Even if there's nothing negative there.
Oh, I've seen it.
Yeah, it's a failing grade. It actually says potential to be bankrupt in the next 12 months.
Yeah.
For no good reason other than you're not buying anything from anybody who's reporting. So it's a little difficult to do on your own. It can be done. I've done it. But it takes a long time. I know you have a system where it's like under 12 months you can build a profile.
Yeah, typically 6 months.
Yeah, which is pretty bad. Oh, it's pretty cool. So
you can curse on here, trust me.
Okay, cool. So I love that, because even as much as I know about this, if I wanted to start a company today and build my business credit, I would call you, be like, dude, I need access to your system just because it's so much easier.
Absolutely.
Right?
And it's getting done the right way.
Well, and the thing of it is, it changes all the time, right? I'm gonna give away some information that I know. Quill, for example, we've all heard of Quill.com. They give business credit to startup companies, or they did. And they're like a little mini Amazon. You can buy office supplies, paper towels, doesn't matter. You can buy anything there. Printers, inkjet. So they give you credit and they report. Problem was, last year, they stopped giving it to starter companies who had no business credit. But here's what they do. They're smart. Buy from us 5 times and then we'll approve you.
Yeah.
Well, you got to spend $50, right? Well, had you had the knowledge to know that the reason they're doing that is you don't have 3 trade lines reporting yet, you got to get 3 trade lines, then you go to Quill, you wouldn't have had to spend $50, right?
Yeah.
So, but let's follow down the path with them. So that's what happened last year during COVID. They actually went ahead and moved into what we call tier 2. And then they stopped reporting completely. Some genius at Quill decided, hey, let's save some money. Let's just stop reporting. What do you think happened to their sales? Plummeted. Whoever made the decision should have been fired or at least apologized, right? They literally stopped reporting for months, just stopped. Now, here's the problem. People like me who know about Quill, now I know about what happened, but let's say I didn't know that it happened. If I didn't know about your system and your team, I would have known that, right?
Yeah.
So I would have just gone to Quill because I knew that they gave business credit. I would have been buying for months and months and months and months from them and nothing happening. So my point is, you've got to be up to speed on this. It changes constantly. It's a moving target. So that's what's great about what you guys do. You guys have the whole team of researchers who are always updating it. I think that's awesome.
Yeah.
As a matter of fact, when I built my business credit for real estate, I bought Ford trucks, F-150s.
Okay.
I had 5 of them. I really wasn't a big Ford fan. That wasn't my thing. I was more into foreign cars, whatever. But they were the only ones I could get business credit from.
Yeah.
Well, guess what? Now, and you know this, now there's multiple. I'm not going to give away the store, but there's multiple manufacturers that will give you business credit. And more importantly, there's one company that finances all vehicles that'll give you business credit. So that's what I mean by it's ever changing. And that's what's great about your team. You guys keep up to date on that. So if ever I have a question, even though I'm sitting here talking about it like the expert, I'm going to be like, yo, Jonathan, what's happening here?
Yeah.
And that's what I love about it. And what's really great about it, and this is the most under talked about part of business credit from all the people out there teaching it. Once you've built your business credit profile, it's kind of like building up an 800 credit score.
Yeah.
What happened? I know you have good credit. I know I have good credit. When I go out to my mailbox today, what do you think I'm going to find in my mailbox? And every day,
100 letters for financing.
Yes,
and offers.
every single day. I'm like, come on, they're just in the trash and the trash.
They don't stop. They don't
Never.
stop.
Never
No.
stops. I'm like, where were you when I was a 500 credit score? Anyway, the same exact thing happens with business credit. That's what's awesome, right? They're buying your data from the credit reporting agencies because that's all credit reporting agencies are. Let's be honest, they're data
They're
salespeople.
resellers. Exactly.
Yeah, they're just data salespeople, right? So if I'm a commercial lender and I want to find customers, where do you think I go?
Yeah.
Right? I'm
So
going to go buy that
ones
data.
That pay. The
Right.
ones that you know pay.
Right. So I used to open up my mail and every day there was commercial lending opportunity. I mean, every single day. I used to get offers. Hey, do you want a high limit credit card from banks in the Midwest that I never even heard of? Right. So that's the under talked about side of business credit. Now, these companies won't help you build business credit, but it's still good credit to get.
Absolutely.
Right.
If you own a business, you should have it.
Right. So there's building business credit and then there's getting business credit. Not necessarily the same thing. Right?
Absolutely not.
Right. And that's where people get confused because building business credit can be really boring. You're buying from people you're not normally. Yeah, you're buying. Like I would never have gone to Quill for anything. I'd have just gone to Amazon or Staples or whatever. Right. But remember, it's a proactive process. You have to think about it, know what you're doing and what your end goal is. Now, let me tell you what your end goal should not be. And this is another thing that's never talked about. Your end goal should not be to get a cash loan without a personal guarantee. It's never going to happen. Now, that doesn't mean that your business credit won't affect you getting that cash loan because it can. I saw somebody. I literally just had somebody turn down for doing $1 million a month, turned down for a $250,000 loan. And they had great personal credit, good profit, horrible business credit.
Yep, it does. It impacts them at that level.
And they didn't even know it because they never even pulled their business credit. In 12 years, they never looked at their business credit. They didn't even know you had one.
Yeah, that's scary.
Yeah, right? Most people don't know they have one.
So to that point, I had 4 people. I did this presentation yesterday. I had 4 people come in and say, pull my business credit, let me know how it looks. Every single one of them were below 50.
Of course they were. There was nothing reporting probably, or there was one thing, or they had a late or whatever.
One was even set up wrong. They were classified, they're a construction company, and they were classified as an eating place.
Wow.
Yep.
Yeah, you've got to know your NAICS codes. You've got to understand what they mean, what's high risk, what's not high risk. I mean, these are all little idiosyncrasies that, look, I'm no expert on that. Keep in mind, and I'm talking to the listeners, I'm not talking to you because you know this. Business credit really was for people like me. It was for manufacturers, right? Because at one time, this country was a manufacturing country, right? Everything was done here. We didn't ship things to overseas, right? So we needed credit. Suppliers needed. If you were a company that sold, custom T-shirts, you had to have a T-shirt supplier who would give you terms so you could turn around, manufacture the finished product and sell it. Print it, you name it, whatever the manufacturing was. Matter of fact, Domino's entire process, they were smart. I'm familiar with their process because I used to do printing for them. They had to have, obviously, think about the vendors they needed. They needed tomatoes, they needed dairy farms, they need, think about all the things they needed, right?
Wow.
They got, including printing, and lots of it. I mean, I printed millions of dollars for them.
Yeah.
They were smart. They decided to buy up every one of their suppliers. So they gave themselves terms.
Yeah.
Right? And then they in turn sold it to the franchise. And they learned that from Ford. Same thing. Yeah. Ford decided they needed credit to build these vehicles, right? From their steel suppliers, they ended up buying all the pieces in between. That's why you'll hear, there's Ford retailers, but then there's Ford marketing, Ford manufacturing, there's all different divisions. They sell to each other, right? They give each other credit. That's business credit, right? That's your business getting credit from this business. And then you're in turn giving credit to another business.
Absolutely.
Right? But in the small business world, our world, that has to come, that can come from retail stores. Right? People really don't think about it. Think about a truck driver, right? And I talk to them all the time.
Fuel cards.
Yeah. I mean, they're whipping out their personal credit cards to buy fuel. What do you think they're spending every month?
Oh God.
Could you imagine what their credit scores must look like?
Oh, I know what they look like because they come and apply for lines of credit and equipment financing. I know exactly what they look like.
Right. And here's the worst part. I've seen them where they go 750, 625, 675, 590. I'm like, it's because they're maxing their cards out.
Yep.
They
could have 100% pay history too.
Yep.
The DTI
exactly.
Every time.
And that's why I spend a lot of time talking to truckers, independent truckers, because really, look, they're in their vehicles all the time. You know what I mean? They're a lot of them are owner operators. They don't understand this. They don't even know it's available. I helped a guy get $50,000 in fleet credit cards from one company. I can't tell you who. I just showed him how to do it. I knew how many trade lines he needed to get to it. And so I said, look, just go to this company, this company, this company, this company, and then apply there and see what happens. $50,000, and it was revolving.
Yeah, that's perfect.
Dude, truck breaks down. Guess what? He can fix it now.
Yep. What they failed to realize is there are certain financing programs that you cannot get into without having good business credit or having the people you work with, your vendors, have good business credit. So invoice factoring.
Correct.
You can't do invoice factoring unless there's good business credit on the other end. Project funding. In project funding, if you're a contractor and you need to start a job and you have a work contract, I can get you the money to start that job all day long, but they don't even pull your personal credit. They only pull your business credit.
Oh, I got more.
Equipment financing. Yep. Equipment financing, you can go corp only and get whatever you want for the business in terms of, it could be machinery, trucks, trailers, equipment, any of that. It's so vital to have business credit in that. And then when you get over a certain amount, like you were saying, you could have a great company, great financials, great credit score. But when you go over that like $200,000, $250,000 line, if you don't have that business credit, it will impact it.
Absolutely. I'll give you another two examples where it's really important. One, both of them real life. Both of them really happened. Okay. The first one is I'm going to talk about my printing company. Now, we were in the end about a $20 million company, 25 million. Right. When I was about 10 million, I was doing business with the government printing office. And I couldn't get anything bigger than $5,000 jobs. It was driving me nuts because my average job was like $100,000. Right. The average job that I did produce for customers. Couldn't get it. Finally went and talked to the head of purchasing and said, what's the deal? They said, your business credit profile, there's nothing on it. I can't justify giving you big contracts. You need to fix that. I went, whoa, that's my first exposure. I knew what business credit was, but I didn't realize if things weren't reporting. And I had millions of dollars in business credit at that point from vendors, but they didn't report. Right. So I had to fix that quickly. It's funny. 6 months later, I'm getting $100,000 jobs. I'm getting $200,000 jobs. Matter of fact, I ended up getting the UN as a customer out of it, the United Nations, and I'm printing their books for them. So there's one example.
I'll back that up. I'm sorry to cut you off, but
that's all right.
After my presentation, someone reached out right away, like in the chat, they were reaching out as I'm speaking about this, and he's a contractor, and he just got $1 million job from one of the municipalities, and he goes, "I need you to pull this right away. If it's not an 80. I'm in big trouble because you need a business credit score of 80 or better to work for the municipality." I pulled it, it was a 60. That was the best one I saw. And now we're working with them. He should be signing Monday to get that boosted up.
Okay. Yeah. And 80. So for people to understand the 80, we're talking about a Paydex score done at Bradstreet. Here's how it works. In their scoring system, 80 is actually perfect pay. That means you pay your bills on time. 78 is even acceptable sometimes. That means, you may have gone 5 days past terms. That's no big deal. Don't be in the 50s. Don't be in the 60s. If you're a 90 or above, that means you're discounting. And if you're 100, they expect you to pay early. Yeah. You've got a history of always paying early. But when you're building your business credit, you don't want to do that because if you pay too quickly, it looks like a cash transaction and it doesn't report. So anyway, that's one example. Let me give you a second example of a highly successful company with tremendous personal credit. They applied for an SBA Express, $50,000 SBA Express.
Yep.
Good profit, been in business 5-6 years. 780 credit score, legitimate 780 credit score, not, authorized users. I mean, this guy was good, right? Got denied.
Yeah.
So I'm talking to me, so what the hell happened? I said, what's your business credit score look like? What are you talking about? I said, all right, let's look. There's nothing there. There was nothing there. Nothing. He had a fruit stand and an ice cream stand, right? Ice cream stand in the summer, fruit stand, fruit and vegetables in the winter. Well, his suppliers did reports. There was nothing going there. So we showed him how to fix his business credit profile. He went back, I think it was 9 months later, did the same thing, got an automated, remember what I'm saying to you, an automated $100,000 approval.
That's
Denied
awesome.
for 50, automated $100,000 approval, same cash flow, same credit score, nothing's changed except his business credit profile. Now here's the crazy scary part of this. The loan officer had no idea why. The underwriter knew.
Of course he did.
But the loan officer had no, she was like, what are you talking about, business credit profile? So he ended up educating her.
Yeah.
How crazy is that?
The underwriter will never tell you.
Nope, absolutely not.
Ever.
Absolutely not. They are, if you think mortgage underwriters are crazy, try business loan underwriters. They won't tell. I told you, here's how they deny you for business credit. Give us your social. Or, and I tested this on purpose. I went to my bank. It's local. It's one of these local ones. Okay. And I said, I want to get a business credit card. And they came back and they denied me.
Yeah.
Right? And he said, well, apply again in 6 months. Wouldn't tell me why. I already knew why.
Yeah.
I already knew why, because I wouldn't give my social, first of all. Right? So, but they wouldn't tell, they're not even allowed to tell you why. It's not like personal credit where they have the Fair Credit Reporting Act where they're required to tell you why you were denied. They don't have to tell you anything. They may, they don't have to, not required by law. There is no such thing as a consumer protection agency for businesses.
No.
You know what I mean?
You're on your own.
That's right. You're supposed to, I'm going to use an old fashioned term. I know it's going to sound sexist, but you got to man up, right? Yep. If you want to step to the plate and own a business, you're going to have to deal with it. And they just do not tell you anything. They literally, I'm telling you, this is what they say to you. Apply again in 6 months. What does that mean?
Yeah. Thanks. I need it now.
Yeah, right. So anyway, that's two real life examples. One that affected me personally, and one where I helped somebody and affected them personally, where business credit changed the game for them. Yeah. Literally changed the game. And you gave a great example of the guy doing business with the government.
Yeah.
And by the way, that's typically from county level up. Yeah. Some municipalities look as well, especially larger ones. I know like the city of Philadelphia will look at your business credit report, but it's county level and up. 100% looks.
Got it. So what are some actionable takeaways for the listeners that we could give?
100%.
And then I do want you to mention your book, because I think people should read that.
Okay.
That would really help them.
Okay, it's outdated, but okay. So I'm going to talk about, if you're okay with this, I'm going to talk about fundability factors.
Of course, yes.
Okay, so fundability factor sounds really cool. It sounds like, wow, what's a fundability? I got to find this. What is this magic fundability factor? What it really is, ladies and gentlemen, is fraud detection. That's really all it is. See, you got to keep in mind, these creditors are giving your business credit with no personal guarantee, right? So they've got nothing backing anything. If you don't pay, they don't get paid, right? They can go after the business, but let's be honest, for $500, the odds are they're not going to, right? So they want to be really sure before they extend that credit that you're really a legitimate business. So they have these fundability factors, and they're going to sound really stupid, but I'll bet you 90% of the people listening right now are going to fail. Right?
I can tell you that we just started running ads, and 95 to 97% of the ads that come in, because they have to use an email address,
always
fail right off the bat. It's incredible. I've never seen anything like it.
Yep. So there you go. That's what we're going to talk about. Fundability factor number one, your email address. Ladies and gentlemen, if you're going to have a business, I don't care if you start today, 5 years ago, don't use I have a business at afreeemail.com, Yahoo, Gmail, AOL, God forbid, Hotmail. I mean,
it costs $8 a month.
Right. Get yourself a legitimate, and here's what I like to see. Here's what I like to see, and I know this is what underwriters like to see. info@yourwebsite.com, right? That accomplishes two things. One, it's not personal, right? It's business. Two, it makes you look a lot bigger. Yep. Right? It makes you look a lot bigger. It's like greasing the wheels to get credit. You've just greased the wheels to make it easier to go through. All right. So get a professional. And look, it's if you're in business, be in business, right?
Yeah.
Don't use a Gmail or Yahoo. And look, you can, even if you're a big Gmail fan, and I am, by the way, you can do one of two things. You can get you can do that, or you can just have it forward to your Gmail. So when you fill out the application, you put info at, but it just forwards to your Gmail account. If you know how to set that up, I have a basket. If you send box of donuts at mywebsite.com, it comes to me. I mean, literally, you could put box of donuts in there. But preferably is G Suite. Get the URL, go to G Suite, just Google G-Suite, SUITE, set yourself up a professional email. Now you've got a Gmail account, and you could toggle literally on your phone between the Gmail, your personal Gmail, and your business Gmail. It's awesome. Probably the best invention ever. That's so they can spy on businesses as well as owners. Right? All right, so that's fundability factor number one. Fundability factor number two, I'm going to ask you a question, Jonathan. When you ask a business owner for their business phone number, what do they give you 90% of the time?
Usually it's going to be a cell phone. If it's not a cell phone, could be a Google number.
And both of them are put you in trouble, right? So cell phone, look, we're all attached to it. I'll wave mine on video. It's never more than a foot away from me. However, what do you think a lender thinks of you when they see a cell phone as your business number, right? You're a one-man band.
Pretty sketchy,
right? You're small, right? Or potentially even fraudulent, right? Because can I buy a burner phone, right? I go to Walmart, I go to Walmart today, get a number. It's not tied to me personally. Nobody knows who I am. So instead, we're not telling you to call AT&T and get the Merlin system installed into your business. For all you old people that had the Merlin system like me, just get what's called a voice over IP, which Google is, you're on the right street. You're just going the wrong direction. Google owns that number. So if you list it with the National 411 database, which I'll touch on in a minute, it's going to come up as Google. It's not going to come up as your business. Instead, you can go to, I think, Grasshopper, Ring Central, somebody like that. You want to, if you're looking to get a voice over IP, just talk to them and ask if their number is listable with the National 411 database. Let me tell you what that is for all you people that are under 40. Back in my day, if I needed to get a pizza, I picked up the phone on the wall and dialed 411, right? Or better yet, I wanted a national company. Let's say I wanted to call AT&T, right? Corporate. I dialed 1-800-555-1212, right? And that's the National 411 database. They would give me AT&T's number, and then they would connect me. Right? That database still exists today, still around. All right? But you can't list a cell phone. It's got to be a real phone number. So if you're not listed there, probably 30 to 40% of the people I know who report check that database to see if you're really in business. You're not there. What do you think they say?
Absolutely. No way.
No, they don't say no way. Give me your social.
Yeah, give me your social.
That's right. So you've got to get listed in the National 411 database. Matter of fact, don't you guys do that for people for free?
We do.
It's included in your system, right? Okay,
absolutely.
Cool. So you got to get that phone number and you got to get listed. You can talk to Jonathan about that. That's fundability factor number two. Number three, biggie here. There are three legitimate business addresses to lenders and creditors. Three. The first one's going to be obviously commercial, right? Commercial building, it's your commercial building. You either lease it or you own it, but it's yours. If I Google Earth it, I go up, there it is. There's your building with your sign on it. That's an A. That's an A+. B is a virtual office. Now, there's a lot of confusion out there right now about what a virtual office is. It is not a PO box. It is not a Staples box. It is not a UPS store. It is typically a high-rise building, usually glass, right? When you'll know it. Here's how you're going to know it. If you talk to a company and they say they're a virtual address, ask them for the address they're going to give you. Say, okay, great. I'm thinking about doing this. What address would you assign me roughly, right? Give me the main address. Go to Google Earth or Google Maps, type in the address, go down to street level and look at it. If it looks like a retail store, it's a PO box.
Yeah.
Okay. There's a company called iPostal that they may have some virtual offices, but they tell everybody they're all virtual offices and they're not. They're PO boxes. And here's the problem. When a lender looks that address up and sees that, what's their first instinct?
Give me your social.
It's fraud. It's fraud, baby. Yeah, it's fraud, right? So think about it. I'm an expert at business credit. I could build a profile pretty quick. I use a cell phone. I use a Gmail address. I use a PO box. You're never going to find me, right?
Yeah.
I'm going to build up a bunch of credit. I'm not going to burn the first vendors, but I'm going to burn those end ones.
Yeah.
Right. I get that high limit credit at Home Depot or a vehicle, right?
Mm-hmm.
And then I disappear. Take the car, change the VIN, right?
Wait 6 to 12 months, and you are going to see so many different news stories break about all the EIDL transactions.
Oh, yeah.
So we did them legitimately. I can tell you that I monitor on social media who is actually in our space. All of a sudden, you had all of these people that have never done any type of business lending telling them they will charge them 5 or 10,000 to put the application through. They knew exactly how to fill it out online. And because I would say the first month or so, the SBA didn't have a process. There's so much bad debt and fraud debt out there right now that hasn't come due yet. Once that comes due, it's going to be headline news.
Oh, it is 100%. It's just like the old mortgage days when they were giving mortgages to anybody who had a oxygen level. Yeah, it was crazy. So anyway, so the address is really important. The third passing address is your home. And look, where are we both at right now?
Home.
Right, we're at home. That's not abnormal today. So don't be embarrassed to have your address. Just keep this in mind. They will Google Earth. Yep. So if you don't want to see, if you live in a trailer or something, you know what I mean, down by the creek, and you don't want people to know where you live because you're presenting yourself as a billionaire, you might want to get a virtual address.
But it also has to match too.
100%.
If you move, that new address has to be listed. I'm in the process right now of since I moved from New York, having everything switched over. It's got to be matched on Google. It's got to match on every single database. Because if there are hits, and there will be hits, they will find it. There's discrepancies. That's a fail.
Correct. You got to make sure the IRS is updated, Secretary of State's updated. Like you said, Google, your website. People forget to update their website, right?
Yeah.
Dun and Bradstreet, you've got to reach out to them. You've got to update. There's a way that your team shows people how to do it through a link. Experian, all of it, and every vendor you have that reports. If you don't update them, they report business credit based on your address. Well, guess what? If it's a different address, DMV just won't report it. Oh, doesn't match. Sorry. So the address is important. You can use your home. Matter of fact, I recommend small business owners, if they're working out of the house, just use your home address. It's fine. You can always upgrade later when you have the cash flow. And eventually, hopefully you get big enough where you need a commercial building. All right. Absolutely. So that's the third. The fourth, I can't believe I have to bring up, but I will. If you're in business, open a business checking account.
Oh God, yeah.
Do not run your business through your personal account. I see this all the time, and I'm like, you're inviting an audit, first of all.
Yeah.
You're actually technically committing fraud.
Yeah.
Right. You're commingling. Open a business bank. They know when you opened it, by the way. I see this all the time. Oh, shelf corporations. Don't buy them. Don't waste your money. Waste of time. Biggest scam going. Here's the deal. You have something called a bank credit score. It's 1 through 5, and it's based on your average deposits over 90 days. Now, they don't disclose what's in your account. That average is 0 to 5,000, 10 to 20,000, 20 to 100,000. Like, it's a big gap.
Yeah.
Okay. It also lets them know when the bank account was opened, what year it was, not date.
Yeah.
But year. So if you tell them you've been in business since 1988 and you opened your bank account yesterday, you're lying.
Yeah.
They're gonna catch you, and they won't catch you right out of the gate. You'll get away with it with the net 30 accounts and maybe even the store accounts. Mm-hmm. But about tier 3, you're gonna pull your Dun and Bradstreet file and suddenly see fraud written right over, like in red, right across it. And you're like, what happened? Yeah. Well, that's what happened. They figured out when you've been putting on your application 10 years in business and you've only been in business 1 month, because some vendors won't approve you unless you're in business 1 year. Right. Yeah. So you lied, you committed fraud. Yeah. So don't lie.
I'm not a fan of the PayPal accounts either.
No, absolutely not. Get a real business bank account. It doesn't have to be with Chase Bank. Go to a local credit union. That's fine. Matter of fact, I believe in that. I actually believe in small town banks way better than big banks. I don't like them. Yeah. But open a real business bank account with the business name on it, the business address. They're going to ask for your home address, by the way. They're going to ask for your home address. If you don't have a commercial building, right? If you use a virtual address, a bank will not accept that as an address. They're going to want your home address, but there's a way around that. You open the bank account, wait about 3 months, go in and update the address. That's all you do. Right. So you have one as a mailing address, one is, the address on the checks, and the one that's actual mailing address will be to your home. All right. So the address. Third is the DUNS number. All right. This is where people get all jacked up. First of all, if you're in business over a year, the odds are you have a DUNS number and you don't know it. Real simple to find out. Go to DNB. That's David Nancy Boy, Delta Nancy Bravo.com. Search, look up, do DUNS number lookup, put your name in, put the state you're in, hit search. Now, when I say put your name in, put the business name exactly as the Secretary of State has it. So if you're not sure, go to your Secretary of State's website, do business search. It's free. Every state has it. Copy and then paste in the Dun & Bradstreet thing. Hit search. It'll probably find you, right? If you're over a year, you're going to have a number. Right there's a link that says email DUNS number. You just click it, get an email of your DUNS number. If you have to update the information, there's another link. You can click that. It's really simple. If you don't have a DUNS number, if nothing pops up, it'll say, well, do you want to apply for your DUNS number? You do. Apply immediately. It's free. For the people in the cheap seats, it's free. You don't have to buy anything from them. They're going to try and sell you. Remember, they delay the number for about 30 days. That gives their telemarketers time to call you and sell you something. And they're going to start at the $2,000 package. Actually, there's $12,000 package, but they're going to start at the $2,000 in most cases. And then they're going to work their way down to $495. And here's what the $495 is. We'll verify your information is true. What information? Well, that you're the owner and that you're located at this address and you're located at this business phone number and this email. Yeah. How are you going to do that? Well, we're going to ask you and you're going to tell us. Well, I'm telling you now. Yeah. Why am I paying $500? It's stupid. So don't do it. No. Get your free number. Trust me, you're going to get it. They're required by law to give it to you. Yeah. It's issued to every business internationally. Yeah. It's an international number. Okay. Get your DUNS number. You need it. You must have it. You're going to get one anyway when you hit a year, but why wait? Because some companies require you have that DUNS number before you even apply to get credit. Yep. There's your 5 main fundability factors. There are 144 minor ones, but these are the ones that most business owners can control and quickly fix. So there's your free value.
Absolutely, I love it. And what about your book, Stephen?
Oh, Business Credit, the Step-by-Step Guide?
Yep.
Oh, geez, everybody should own it.
Yeah.
Wrote it a couple of years ago. Here's the thing. Remember we discussed that business credit's an ever moving target. Yep. And so I wrote it, I released it around Thanksgiving. It took me a couple of months to put it together. And by January, the information was bad already.
Oh, wow.
Now, not the main information, understanding business credit, the fundability factors, that doesn't change, right? Yeah. But some of the people that I told you to go to and get approved don't even exist, or they're gone, or they don't report. But if you want to just know the overall how business credit works, you'll get a really good understanding. I get lots of people calling me. I get invited on podcasts because they're like, read your book, man, you got to talk about this. It's a game changer, and it really is. And this isn't a sales pitch, ladies and gentlemen. I got nothing to sell. This is a game changer, and 99% of the business owners don't use it. Yeah. And then the number one complaint I hear is, man, I don't have enough credit. Really? Yeah. Well, yeah, you don't have enough credit. You never even occurred to you. You wrote your business plan, and in your business plan was, I got to sell this, and here's how I'm going to produce it. Here's my back end, and you never thought about funding your growth. You never thought about it. So if you're unsure, now, I am going to plug you. Now, reach out to Jonathan. He's got a way to show you. It's a game changer.
Awesome. Awesome. Well, Stephen, thank you so much for your time. I appreciate you coming on here.
Oh, man, my pleasure.
And we have to get together next week, early in the week.
So, well, I got to ask, did you get one of the new construction houses, or is it a former, pre-built? In other words, a resale?
No, I bought it from somebody.
You did? Okay. Did it come with a pool?
Yes.
Perfect. I'm coming to your house.
Come on over. And I got an outside bar.
Oh, dude, I'm there. My house I bought because it was newer. It was only less than 5 years old, and just for the size, the price. I don't want to go into that, but it didn't have a pool. Right? And I was like, that's all right. I'll just put a pool in. Man, I called in April. It was 50 grand. When I called back in June, it was 125,000. I said, you know what? Take your pool and shove it. I'm done. I'm out. And I'm going to wait. I'm like, these people are lunatics because we have so many people moving here. Yeah. And they all want pools. Well, I'm not going to pay double and triple for a pool just because you want one too.
I had to park my boat in St. Pete.
Yeah, I know. I could have told you where to
St.
park
Pete.
closer. I know a closer place with better fishing, by the way.
Okay, I'm gonna call you. I'm gonna call you after this then.
You got it. But yeah, definitely, man. I'll bring the wife over and we'll,
Let's do it.
hang out. All right,
Wait.
Jonathan, I appreciate it.
Thank you, guys. If you got something out of this, and I know every single one of you did, because we just gave you the blueprint, please share this episode and give us a 5-star review. Thank you, and we'll catch you on the next one.
Creating success out of failure. Creating success out of failure.
Thanks for tuning in to Creating Success Out of Failure. Please share this with someone that needs to hear it, post it on social media, and leave us a 5-star review. I'll catch you on the next one.